Coming up in this show, I'm going to bring you my opening comments on the markets. Arvi has a great session of trade planning using askSlim tools. He's going to bring you analysis on United Airlines. Katie's going to bring you trade planning with options. This is an option trade setup in the S&P 500. And our last 3 days for our level 4 special. Don't miss this. And I'm going to bring you analysis of the stock market on building cycle analysis on the S&P 500 and why there is danger in coming weeks. Do not miss this lesson and my projections on the markets.
Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market sank last week as investors got hit by a triple whammy after the S&P 500 advanced steadily, avoiding a 1% decline in any day for 47 straight days. That changed midweek as the bond markets moved down sharply, yields jumped, as it was announced that a heavy auction calendar was even going to be heavier to finance that massive government debt and that huge amount of spending that this government does. Then that same problem pushed Fitch to downgrade the U.S. government debt from AAA to AA+, which again sent yields to the upside. And stock indexes moved down sharply on that day, with Wednesday seeing the S&P 500 finally down 1% and the NASDAQ down 2.2%. Then there is market valuations, extraordinarily high, of which we have given several measures over the past few weeks. And that was punctuated by Apple's earnings, which beat on the top line, but the stock moving down here on Friday by 3%, as they showed that this was the third quarter in a row that revenues have declined, and that's the first time since 2016. With that huge mega cap, the heavyweight in the S&P 500 and the NASDAQ, its valuation's very high. Well, this stock is not likely to offer upside support that it has in recent months. That is what we expect as far as stocks beginning to weigh on the indexes that are in that mega cap category. Amazon was a different story on earnings, gaining here on Friday 9%, but with the PE, well, it depends on how you measure it, over 150 or over 300. This may just be the shorts getting grilled and latecomers to the long side for this stock. Overall, earnings for the S&P 500, well, 81% of them beat what analysts had projected. Either the economy is absolutely great or analysts suck. I'll let you decide which of those makes sense. The stock market, well, it's moving down in the little short-term correction as we had forecast, even though we have a little bounce here on Friday so far. Now comes a big test. Our work shows that there is a window of time for a rebound. And Katie is going to illustrate this, and so am I, later in the show. But Katie has a little trade that you can make if you think that the market's going to move up again. However, this actually could bring some disappointment moving forward. I'll show that in detail in what I think is an amazing lesson in cycle analysis coming up later in the show, as I look at the S&P 500 in stages of how I come to the analysis that I do. Not only will you learn a ton, but it may get some people worried. For the week, well, the stock market index is down to depending on what you look at, about 1/3% to 2%. The Dow was the best, holding gains nicely, but the NASDAQ was the worst. Bond market, well, there was a crush going on. 30s fell 3 points. It's the second week in a row they got hit pretty hard, and the 10-year yields up right now 13 basis points on the week, but they were up 23 basis points on the week, a high of 4.2%. That was a surprise to us. Now, we upgraded where we thought the yields would go, maybe to about 4.25%, but that was only in the last week because we actually thought the bond market was bottoming, but now it has extended out those losses and that declining period. And we have shared that new analysis for our members, and you'll be able to see that, of course, in the Future Speak show on Wednesdays, where we do just amazing analysis. Arvi's in charge of that one, and you will be able to see over 25 different futures contracts and the ETFs on indexes with analysis on weekly and daily. So don't miss the Future Speak show. Gold market, gold's down about $21 on the week, silver 75 cents. I think it's a buying opportunity. I've been bullish on silver and gold. I still am. I think the fact that the dollar got a rebound is false, and that we're going to see gold and silver moving up again. Well, I think it's a buying opportunity, and I did, and that means more physical hedge towards the bank vaults. Dollar, well, up slightly, and I think there's trouble coming in a number of weeks or a couple of months. The upside, potentially 102.5 to about 103. I think that's about all it has on the upside, with very much risk to the downside later in the year and into next year. Oil, this was the 6th week in a row of gains, up $1.40. It's certainly supply-demand concerns, and fossil fuels just plainly are not going away, no matter what. All of those people that want to see electronic vehicles take over, that's a long way from where we are right now. And as far as energy demand, well, it's certainly on the fossil fuel side. So we have oil looking much, much better and likely to see minor pullbacks in there, and I think higher prices again. Again, watch Future Speak, and you can see that upside projection, which is up into the mid-90s. We have just some great stuff coming on in this show, but before we get to that, I want to invite you to explore the askSlim.com website. Get acquainted. You can sign up for level 1 for just $45 for 3 months, and you're going to get information from us every single day, especially on the indexes. On YouTube, subscribe to our channel there, click the notification bell, and like this video. On X, wow, that looks strange, doesn't it? Follow us at askSlim. And any questions that you have on what I present here in this show, anything about our education and analysis, please do write to Matt at askSlim.com. This is Trade Ideas. Ivory's going to share analysis in UAL, which is negative. This is just a fantastic illustration of askSlim.com tools and the method that we use. Show them, Harvey.
Hello guys, this is Arvi Ramachandran. In this video, what we're going to do is a little bit of trade planning. We are going to show you how we use the askSlim Market Conditions Monitor Premium version, which is available for level 4 members and up at askSlim, and then combine that with our askSlim charts. And at the end of this video, we will share with you a sample trade idea, in this case in UAL. What I want to first do is highlight what we are doing here with the askSlim MCM. Now, the MCM is a fantastic way to get a quick look at the trade setup conditions based on your personal time frame. What you can do here is on the left side, you'll see that it says trader type. If you click on that, there are 4 different time frames. There's intraday, there's near term, which is anywhere from 1 to 5 sessions. There's short term, which is anywhere from 1 to 3 weeks. And there's intermediate term, which is anywhere from 3 to 8 weeks. For this video, we are going to look at just the short term. And what we've done here is we have a large list of underlyings that we follow. These are some of the most liquid stocks and ETFs in the market. And you can filter by the trade setup condition. So I'm going to click on this, and you'll see it'll range from anywhere from very bearish to, on the upside, very bullish. In this case, as I said, we're going to be looking at a bearish short-term setup. So let's scroll down here, and you can see some of the names that are bearish. There's CORN, there's PFE, there's TAN, TLT, Disney, LIT, so on and so forth. Now, we are going to be looking at a bearish setup here in UAL. I'm just going to scroll down a little bit further here so you can see it. You can see all of these names that are currently set up bearishly on a short-term time frame. And you can see we have UAL right here that is slightly bearish. Okay, so we have a core slightly bearish directional bias in UAL. Now what we're going to do is see the live annotated charts that we share with our level 4 members and up at askSlim. And what we're going to do is just go ahead and open up Thinkorswim and pull up this grid. Now, this is just one of several grids that we share with our members. As you can see, there's TOL, TSLA, UAL, Uber, V, Walmart, Win, and XOM just in this one grid. We have over 60 stocks and ETFs that we update throughout the week and post to our site. We also have over 27 futures that we update throughout the week and post to the site as well. And our level 4 members get direct access to that grid. So let's go ahead and pull up UAL and walk through what we see here on both the intermediate term as well as the short term. So this is our intermediate term cycle analysis here in UAL. And what do we see here? We see what is likely an early stage now corrective period in UAL. You can see that we are curling down on the downside here and are in this intermediate term corrective period with a low that is due 8.7 to 9.25. So you can see how easy it is for a level 4 member to load up the chart and see all of the details here in any given underlying that we follow. On the downside, we have a zone that we are looking for UAL to sell off into, and that's in this zone from 49.26 to 47.28. That's where we're looking for UAL to sell off into, as we have drawn in with this projection. Now, the overall cycle structures are positive. We have a higher cycle high, as well as, in all likelihood, a higher cycle low versus that old low. Therefore, we would look for at least a retest of the old high in this next rising phase. That's why we have drawn this as such. If we go ahead and move over to the daily chart. So this is our short-term cycle analysis for UAL. And what we see here is a sign of change in terms of that cycle structure. Leading up to this point, we had higher cycle highs and higher cycle lows, but that has now changed as we have a lower cycle low, as we are now looking at this intermediate 38.2 fib at around 51.40. There is also a daily low that's due, 8.1 to 8.11. So what we're looking for is for a bounce into this zone from around 54.07 to 55.67. Would not look for a move through 55.67 at this point, and then for this to fail and roll over. Now, on the downside, we have this 38.2 fib, which I said is right around 51.5, and there's an intermediate term 50 around 49.42. Those are our levels that we would be looking for after this next rally, in all likelihood, fails and then rolls down. We'll be looking for a move down into these two levels on the downside. So you can see how easy it is to trade plan. First, get that core bias in the MCM, and then shift over to our charts to see what some of the evidence of the weekly and daily cycle analysis suggests. So hopefully this was helpful. As always, if you have any questions or comments, feel free to send me an email. Thanks again, and I hope you guys have a great day.
Now we bring trade planning with options. Katie, our options expert and an expert in cycle analysis, combines all of that, our charts with option trading. And she's going to show you short-term bullish options trade in SPX. In the show, we have been warning about that there was a short-term decline coming, and that the market then would again attest the upside into the area of mid-August, and this is an options trade that fits into that analysis, and she's going to show that to you. And then I'm going to give you some details later on in the show about how we come to this analysis, which I think you're going to put that all together and love it. All right, so let's take a look here. Katie, show them this great stuff.
Hi, this is Katie Anagnostos, and this is a Trade Planning with Options video on August 3rd, 2023. Today we're going to look at a trade idea in one of the indexes. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow these trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askSlim.com. Let's get started. Today we're going to look at a short premium trade idea in SPX, that's the S&P 500 cash index. So this is the weekly chart. Some important things to note would be the positive momentum with a green reversal scout. The projections showing the possibility of running up into these fib extension levels off of the daily chart that I will show you in a few minutes, and also the weekly cycle timing window coming up. This ideal window runs from September 4th to October 13th. Switching over to the daily chart, you'll notice that we are inside that daily cycle timing window right now. It is marked out with these blue vertical dashed lines. Now, I want to show you what this looks like over on the cycle low timing tracker, so let's switch over to that very quickly. This is today's cycle low timing tracker, and you will find SPX as well as NDX up here, right here in the cycle timing box period of risk for the daily time frame. Now, this first column is for the weekly time frame. The second column in each of these boxes is for the daily time frame. So when we begin to get enough positive price action to trigger the bottom pending algorithm, you will also then find SPX in this box, and then subsequently the bottom confirmed box as it moves through these phases, but that has not happened yet. So back over on the daily chart, that daily cycle timing window runs through August 8th. Now our reversal scout has turned negative. The slim ribbon, which colors our candles red, green, or gray, depending on momentum conditions, that is still positive. And this morning we got down into that upper support zone, getting a nice bounce now around midday. So another thing to notice here is that this subsequent daily cycle, this next large dominant cycle, that ends around October 7th, plus and minus several days. So that fits within the weekly cycle timing window when we would expect to get our intermediate low. So although we are expecting a bounce out of this daily cycle timing window, we have to keep in mind that this cycle over here has a likelihood of showing weakness and possible failure as we go into that intermediate low. Another thing we can use is the VIX daily chart. Here's the VIX daily chart. This cycle work here shows that the VIX cycle timing window begins between August 9th and August 18th. So if VIX is due to bottom in that time frame, then the index may peak in that time frame. So for our options trade idea, we're going to do a shorter term trade and use the August 18th monthly expiration with 15 days to go. Back over on the SPX daily chart, the bottom of our support zone here is at about 44.35 with a 78.6% fib at 43.88. Over here on Tasty Trade, I have SPX loaded in here. The IV rank is 12.7. It had come up as the market sold off a little bit this week, now going back down a bit. Let's open up this August 18th expiration cycle. We can use that AM expiration, doesn't really matter because we would be out of this trade one way or the other before then. We're going to do a simple short put spread. Let's sell the 44.35 put, which was at the bottom of that support zone. Then you can make your spread as wide as you want. I'm going to do a $10 wide, so I'll buy the 44.25. Now this gives us a credit of $1.70. Our profit target is about 50% of max profit, so we're looking to take about $85, $90 out of each spread that we trade. Max profit, $170. Max loss, $830. That is also the capital requirement that you need to place this trade. And now let's go and take a look quickly at the risk graph. Here it is. We want SPX to stay above our short strike. We'd like it to move up for time to pass, and a volatility contraction would also be beneficial. tastytrade is our preferred options trading platform. Please go over to the askSlim homepage, hover over the Marketing Partners tab, and click on tastytrade. That will take you to a page where you can open a tastytrade account through our link. Doing that helps you with some special bonuses, and it also helps us, so please consider checking that out. That's our trade planning with options video for today. As always, please feel free to reach out on Discord or via email to katie@askSlim.com if you have any questions or feedback.
This is the last 3 days of our top tier special trial. First time subscribers and upgrades, you're going to get 3 months of our level 4 for 35% off. It's only $101 a month versus $159 a month. So you'll pay $303.75 for a 3-month period. This is fantastic because it also includes the premium version of our new AI app. It's a market condition monitor that has our built-in algorithms, and RV showed that earlier on in the show, so you can get a good idea of what the MCM is. Level 4 includes everything that's on here and everything that's in level 3, 2, and 1. I don't think there's anywhere in the world that you can get this type of education and analysis and proprietary market timing tools for your trade planning. I don't think you get that anywhere in the world, especially for $101 a month. This is crazy. And we have this amazing team that supports you all along the way. Sign up now, just the last 3 days now, for this level 4 special for this amazing 35% off. Stock market analysis and projections on the S&P 500. First, look at this important slide. It gives you an idea about how we approach our analysis and how you can apply that to your own work. So important to read this slide. All right, stock market analysis. This is really going to be fun and exciting because I'm going to show you what goes through my mind, how I build the analysis, looking at the probabilities of trend change coming up and how there may be trouble ahead for the market, but why I actually believe that. I'm going to be looking at the structures of the market cycles, and I'm going to be looking at how we build into all of the information to come up with some of the evidence analysis. So I think you're going to find this fascinating, and just watch this closely. So we're going to start out by first not looking at that. That's the weekly chart of the S&P 500, but I'm going to come back to that in just a moment. And we're going to start out right here. This is a daily chart of SPY. And I'm going to take this through the stages of how I do my analysis, and then you are going to really learn a lot. And you'll be able to really, if you make the decision that you want to become a cycle analyst, you can go to askSlim.com to the workshops tab up on the top of the front page, and then you will be able to get some more free analysis, a little video I did on cycle analysis that I think is important for you to see, in addition to what I'm going to teach you right now. So cycle analysis plainly is an art form, as you see right over here. This is our palette that we work on when we build that, and all 4 of the analysts on our team are very fluent in this, and fluent of the work of JM Hurst, which is the core of his work, is the core of where our work comes from. Though over my 50 years as a trader and 48 years of doing cycle analysis and learning this, it has evolved in a way that's somewhat different from the way JM Hurst originally taught it. And I think you're going to see the type of work that we do looking at it. So what are we looking at here? Well, we're looking at a daily chart of SPY. And we're going to start out with just our basic momentum indicators on here. This is the slim ribbon right over here. And the slim ribbon we have available to put on the thinkorswim platform. It is also available on TradingView. It is also available on Tastyworks and Wealth 365 charts. So there are 4 places that you can get the slim ribbon. Now the slim ribbon PO on the bottom, which is a very important indicator, is only available for our level 4 members. And what essentially that gives you is not only the momentum conditions, so when it's green you can see that, but when the momentum resumptions come, which are the arrows that you see right in there. So when the market is negative and you get the downside resumptions right there, when the market is positive. In green you get the upside resumptions, and that's really important. You can see right over here today on August 4th, on Friday, we're getting that signal of an upside resumption. So it's kind of giving us a warning that the cycle bottom that we were expecting is probably here right now. So that's a little upturn you see right there. But I'm going to show you much more how I get that. So this is the first look at the analysis. So now I want to step it up, take it a little bit further. So I'm going to go to the next drawings right in here that you can see. And what we want to do is identify the money flow rhythms, the cyclic periods. In other words, what are the rhythms? How do we know that money is flowing in and money is flowing out? And how do we know the condition of the market based on those flows? That's what I'm going to show you right now. So what we're going to do in here is we're going to add the ideal cycle energetics, the money flows, the cycle phases. And if I look here at these green arrows, they're pointing at where these big key lows are that you can see. And what my trained eye is looking for are lows that occur in similar time durations that you can see, like right here to here and right here to here and right here to here, and then one that's due to occur right over there. And what I do is I put in these cycle brackets. That's a drawing tool, and I have that set at 50 bars. So, if I highlight this and I say, let's just activate that, and let's just edit that. So I'm going to click on that, and as you see, it's set to 50 bars right over there as the cyclic period. So what that tells me is that there's a rhythm going on here, and the rhythm is that, well, it rises and it declines, and from this low to this low is 50 bars, and on average from this low to this low is close to 50 bars, and close to 50 bars, and then close to 50 bars. So that tells me that there is a cycle in here that on here is probably the dominant one that is important. So I'm beginning to understand the energies or money flows in the market. So now what I'm going to do is go to the next one right over here, and we're going to look at the drawings right here as I advance them. And now what I'm doing is looking at the cyclic periods, but also adding in what is probably a minor cycle. You can see somewhere right over here in the midpoint there was a decline, and then another rally began. The same thing right over here, a decline and a rally began. The same thing here. So I'm looking at these minor cycles, and this is the development of the cyclic harmonics that you have in here. So you have a dominant cycle and a minor cycle. I want to look at that a little bit more to be sure that I really understand what's going on in here. So I'm going to advance this again to the next process that goes on through my brain, and I'm going to add in the dominant cycle lines and timing lines, as you can see. So now all of a sudden it's really starting to become clear. You can see that though this is where the ideal cycle troughs would be, where they're both coming down in a nested period here, this was just a bar or two off. And we always say that it's like 3 bars either side of the ideal that it's likely going to come. You can see the ideal low is right here, and then right over here on these dominant cycles. as I look at these 4 previous ones. So that kind of gives you an idea that something is beginning to happen over here. So we've identified these minor cycles, and the next thing I'm going to do is add in those minor cycles as we begin to look at, again, these energetics in the market and get a real good sense of what is happening as far as the flows of money. So now I've put in those minor cycles right there, and you could see these clear harmonics. We call these harmonic families, just like in music, as you can see, and there's a rhythm. When there is a positive configuration, in other words, it ended higher than it began, then the next cycle is likely to get you above that level. And the same thing right over here, and the next cycle gets you above the level. This is actually a very positive cycle here, and you could see it was followed by these rhythms in here. Also, I do want to continue to look at the momentum conditions, and you can see the slim ribbon positive throughout this whole period. There was one little day in here or two where it went neutral, but the slim ribbon PO really keeping you on track with what are very positive conditions that you can see in here. And I don't have to show you much about the fact that this is an uptrend. I mean, the uptrend looks very clear when you look at that. And, you know, if you wanted to put in some channels and something like that, it would look something like this. And you can see that there is a pretty good uptrend that is very visible looking at that. So all of these positive things, it shows me the positive money flows, and it shows me where to create an expectation that these corrective periods are over with. You see, my brain is starting to look at this and say, well, after, you know, when you get up over here, it's due to have some decline, and then you get over here, it's due to begin to advance, and then when the momentum turns positive, it really enhances that. And you can see where we are right now is that, well, things are kind of looking like we're coming to the end of some sort of a corrective period. So let's advance this again to continue this analysis, and we'll look here as we begin to look at the energetics in the market. So these are the squares, these rectangles I put in here, essentially are showing you that, you know, when you have these both the minor and the dominant cycle moving up, you're going to be in a positive energetic period. Now look at this minor cycle right over here. You can see that, well, that ended up closing lower than it began, and we know that there's another minor cycle in this family. So what happened was it rallied, and this lighter green area is the minor cycle period where it's positive, but then it began to break underneath these levels, and you can see that began to give you a negative message, as you could see. Here you could see it's different, both moving up. Here's the minor cycle period where it was positive and moved up, and here's where you got a reversal, and of course the corrections coming down right in here. I often show this as a yellow period of risk, where you see that red right over there. You can see the rising period in here, the period where money's flowing in, and the declining period right over here. And you can see how the slim ribbon PO begins to highlight that there. Green positive period here, minor positive period here, and the corrective period. But look at how strong this was. We call this swamped. Why is it swamped? Because there is a force moving on the upside that is so strong, it warns us that the next cycle is likely to be moving up strong again. And you can see in here that minor green cycle right there and this pretty good upward move. Now, a lot of times I will get into this minor cycle corrective period in here and look for a pullback, and people will say, Slim, you were negative. Well, I wasn't really. I was just looking for a pullback. And the same thing, as you can see right over here. So you can really get an idea of the energetics in here, the dominant cycle, the harmonic families, the minor cycles, how the energetics work together, and where we're coming to right over here. That's, you know, why Katie did the piece that she did earlier in this show here on August 4th. If you're only watching a clip of this, you're probably going to want to go back and watch the whole show, because something is coming up right over here. Let's advance this again to the next set of drawings here, the analysis, and we're going to go here to using the information now to do projecting. So now what I've done is I've added in the this green area here where these cycles are beginning to turn up. These are the cycle lines right over there. And this note here, strong momentum and positive timing translations Positive configurations suggest a minor pullback followed by a test of the high. Yes, that's what we're looking for right over here, is for a period where it begins to move up. Now, we learn a lot from this over here. How long does it last moving up? And what happens if it blasts through the high and keeps going up? How high will it likely get to? What happens if it comes up here and fails and then begins to move down and gets below that low? Well, that would be certainly a negative thing. And what could influence that from coming? So right now, you can see beautiful cycle harmonics right in here and calling for this corrective period. There's that yellow zone, a small period of risk because it's here on the daily short-term chart in a upward momentum condition that still exists, and the slim ribbon PO giving you that upward view right over there. Let's just zoom in a little bit right over here so you get this picture right here of the strong configuration, strong cycle translations and configurations, and called for a minor pullback in here. And you see we're having this little up day in here, but we don't know if it'll hold yet. There are signs that it will, and that the low might be seen, and we could be getting ready to move up, but we don't know that for sure. As we look in here, it might take out the lows for another couple days. You see this blue timing line that comes all the way out to, well, another 3, 4, 5 days in here before we are, through this bottoming period. So we have to really see how this acts in here. But you get the idea as I begin to use the information for our projections. So now let's look over here at the next one, and you can see that I'm taking the projections even further out. And what I've done in here is I've put in the Fibonacci extension lines over here that gives us an idea as to where it's potentially to move up to and find some resistances here. And I have actually 3 different tracks in here. We'll start out looking at these lower, at the lower one, which would be if it just wanted to follow the ideal patterns that we have in here. That's this right over here. It comes up, tests, take this out a little bit, and then begins to roll over right there. You'll notice right in here that I have a peak right in here on the minor cycle right around mid-August. And there's a reason for that looking at the VIX, and I'm going to show you that when I look at the VIX in a few minutes. But this is a positive period. This is calling for the stock market to begin to move up again, starting either now or in a few days, and then at least testing 459 on the SPY, and potentially getting up to this level here. 466 is the next level we had shown, and we showed that level before. Right over here is 473 in that upper track, which is possible based on the formations we see in here. And here's the next one right up over here at right around 480, which in my opinion is a low probability, and I'll show you why that's a low probability coming up. And that the highest probabilities are that it tests this level right over here and then fails, or maybe tests 466 and then begins to roll over. I'm going to show you why I think that's going to happen in a couple of minutes as I move into further in this analysis. But next, what I want to do is I want to look at factoring in the cycles of longer duration to get the alternative projections. So I'm going to leave this chart for just a moment. And then what I'm going to do is I'm going to move over to the chart of the SPY on the weekly. So we're going to come back to this in just a moment. And I'm going to switch over to this weekly SPY right over here. So this is our analysis on SPX actually. And let's start out by just looking quickly at the bigger analysis in here. You can see these, again, these big harmonic families that are in here with the minor cycle and the dominant cycles. Right over here, looking back in 2022, there was a period of risk here that we were looking at from January to March. And you can see that fell hard right over there. Here, looking back into the later part of 2022, you can see in here the period of risk was September, October, and you got that big decline right over there. Here, it began to form a more positive pattern, but there was still a period of risk here, January to April, and you can see that it fell actually from February here down into March, and it was a little bit shorter than expected and bottomed a little bit on the early side, as you can see here. So now we're entering this period of risk right over here, which is really mid-August through October. That doesn't mean it's going to fall from mid-August. It doesn't mean it's going to fall all the way to October. It is a window of time that we are looking for that can contain and likely will contain a pretty sizable correction. If you look at these corrections and the size of them, I mean, this was from 48.18 down to 4,100, so 700 points. This was from 43.74 way down over here to 3,500, so that was 800 points. In the S&P 500. This was the bullish one from 4190 down here to about 3800. So that was almost 400 points on the downside in a bullish situation. And here you could see that it's reasonable to project that the peak in here right around 4600 could take it down here to 4,300. That would only be 300 points. That's less than right over here, or over here to 4,200. So this period of risk that we're coming to right over here, this influences our analysis that I showed you on the daily chart, because it says that the projections that we have that are ideally, neutral to lower are the ones that have the highest probability, and the ones that project up over here to around 46.65 are a lower probability. So we still have that here on the weekly chart because, well, we still have strong momentum conditions right here. I know this is a long piece, but I'm letting you into my brain, letting you see the extent of this analysis that I do and all of our analysts do here at askSlim, and why it's so important for you, if you want to learn this, to become a subscriber at askSlim. I'm going to keep promoting that because I think it's so important to you and to all of our current members, of course. So this is a period in here that I'm looking at that is risky. So if I were to look at the VIX, which has been an amazing timing tool for us over the years, I'm going to look here at the side-by-side for a moment so you can get an idea of what I'm looking at right in here. And that is that we have a bottoming right over here in the VIX. Now, the VIX popped all the way up here close to about 18 this week, but is coming down. And that is actually what was expected, that we would get into a period where the market would rally again. But this in here is the bottoming phase for the VIX, just as we believe we're in a topping phase for the market indexes. So if I blow this one up right over here, you can see there's actually, we're looking at a shorter cycle in here that actually might have made the bottom already. If not, it's that black cycle, which are bottoming right in here, which call for that we're in a bottoming phase. Now, I want you to note that momentum on this weekly is turning up in the VIX. That is a sign that we're getting into, like right over here, that rising phase in implied volatilities. Right over here, the rising phase in implied volatilities. So that's what you see, and we're getting the warning right over here that that is happening. When I look here at the daily right over here, you can see that, well, momentum looks like on the short term, it's turning up in the VIX. We're expecting this pullback in the VIX here and the move up into mid-August for the stock indexes. So there's this window of a likely rally for the stock market indexes right here. But then after that, the VIX is likely to be moving up. And I'll go back to the weekly for a second. You can see in here that we're projecting VIX up into the 20s that actually might go for a long period of time, or maybe even up into the high 20s or even into the 30s. This one got up to about 30, and that is not ridiculous if we start to get some real corrective period here in the market. So this is showing you that there is a very likely bottoming in implied volatilities, a very important timing tool. looking at the VIX. So now if I go back, and these are projections that I did in my analysis on this daily SPY, well, now I have to start to say to myself, why would I be projecting to get up to these levels when the dominant force on the weekly chart starting in 1 or 2 or 3 weeks is likely to prevent that? So then what would the analysis be if we added in the periods of longer duration that are now negative? That would look like something like this, where I have brought that in, and what it still shows you is that there's a period that's positive right in here. We're likely to get a rally into the 2nd or 3rd week of August, testing these levels, but then we get these downward forces that are created by the weekly chart, and that's why I have this yellow period of risk in here. The weekly analysis period of risk is mid-August to early October, and what we must see is the momentum begin to go negative. That would mean that this would turn red over here, the slim ribbon would cross over and be negative, and on the weekly chart we would see the reversal scout, as I showed, begin to go negative also, and our MCM, the market condition monitor, which is essentially our beginning of the development of our AI, has our built-in algorithms, and that would begin to warn us that in the shorter term it was beginning to turn down, and that this upside move in here that's expected is failing. So we're using the information that we have for projections. We're adding in cycles of longer duration plus the VIX to get a sum of the evidenced highest odds projection, and that says to us that this next rally in here that we're looking for is likely to fail, and then we get cycles that begin to trend on the downside. If I look here at this dominant cycle right over here, it tells you the timing for that next cycle trough, which comes in actually around mid-October. Looking at this, so I look at this one, it's also, because they're nested, comes in mid-October, and that means that this correction could be all the way out into mid-October. If it would shorten up a little bit, then it might be early October, but that's where the risk really goes out to, and they're looking at this as we have brought it all to you as far as from the beginning of the analysis to where we are right now, and why I have been warning that there is a period of risk in here. Now, you've seen in the past that strong momentum on the upside skews these. Sometimes they end up to be stronger than expected, and it is possible that this does move up into these higher areas, and then the period of risk comes in, and it's a sharper downside move that doesn't last quite as long. We can't be certain about that. I'm using the VIX timing to help me, that it's around the 2nd week of August, maybe the 3rd week of August, that this peak is put in place. And we're going to learn by how this rally develops in here and how long it lasts. So that is a very, very long piece that I brought you with the cycle analysis of that we do, and how I built into it, and how I come to this analysis right now that says to me that there is likely to be risk going forward. Remember, you can learn more about this. Go to the askSlim.com website, go to the top tabs there, and you'll see workshops, and you can click on Cycle Analysis Workshop, and there's a video there that gives you more information on cycle analysis, and I really encourage you to invest in the workshop to learn more about this, and of course, take advantage of the level 4 special that we have going on right now, which you can see right here. We're in our last 3 days, and just on the top of the front page, click the Learn More button. You'll get details about that. And it's level 4, 3, 2, and 1, everything that's included. Our team does a fantastic job, and you're just going to learn so much when you look at that. And do go to, if you're brand new, sign up for level 1 if you want to just get a taste of what we do to get acquainted. That's just $45 for 3 months, and you're going to get daily information on the indexes that Matt does amazing work on that. So subscribe to our YouTube channel, like this video, give it a thumbs up, watch our member videos in the playlists, and on X, follow us at askSlim. And any questions you have on what was shown to you today, write to Matt at askSlim.com, or you can write to team at askSlim.com, and they will send your questions to any of the appropriate analysts who you might have questions for. That's it. I want you to be so unbelievably careful. It is so crazy out there, and I'm always wishing you great trading.